All right, we're recording. So, welcome to another intraday lesson. We're gonna start off with characteristics for seeking a possible trend day or switching to a possible range day, and depending on the opening that you have. So, right here, live, we have or overnight range from we have a very big trend day on the prior day, and we had an overnight range from here, right? This is where it starts. If you see this dotted line, this is where the overnight range starts, and this is where the volume starts. This is where the market open, right? So we do know our overnight lows and we do our overnight highs. So a lot of the day traders on the will have some a stop loss below the overnight low or above the overnight high, right? Depends if you're short or long, right? What is your bias coming into this day? So right here, whenever you make some kind of break, this is basically a short signal for people, right? This is like, okay, we broke the overnight lows, it's time to go lower. And if you don't materialize, it becomes like a liquidity grab, right? Some kind of bear trap, if you must, right? Longs will get stopped out, market grabs that liquidity, shorts will get trapped in, market grabs that liquidity, you don't have continuation higher, you close the candle above it, and that's your first sign of, okay, we're not we don't have momentum to the downside, as of that moment, right? As of that moment. So that's very key. That's very key that the market is really not strong one directional, right? So it could also be reversal. That was a reversal sign. That was a sign to start going into longs. I did not take that long. I think I was managing Tesla at the time, and so yeah, that's the idea of the first characteristic of recognizing that this is a non-trending day, right? Just because it's a short signal or long getting stopped out or below the overnight low. Now, another one is that the 20 exponential moving average helps you a lot on any type of trends. So I don't know if you noticed, but I posted that I went short right here, which it did work for a little bit, but then it went back up. So you don't. Whenever you have a powerful trending day, this is a 20 moving average from the 5 minute candles. Whenever you have a powerful trend day, you can at least, I mean, you can expect this to hit and not hit it again and go back down, right? So something like this, right? But we didn't get that. We didn't get that, right? So if you do get a very good entry like that, which with a tight stop loss, and you should actually move your stops to a little bit in profit or not, because the a strong trend will only touch it and go, right? You're not gonna get a second touch or whatever, right? It's not gonna be a little dancing. And yes, I know it dropped a little later, but this is and we're talking about a strong trend day, trend. That we're gonna keep legging down, legging down, legging down, and whatnot. This was getting above it again and consolidating right there and then. It's just not a trend day from the start. And I have to remind you, anything can change, because if you look at the prior day, even though we trending down most of the day, at the beginning it was not a trending, right? It was basically ranging, uh, making a lower high, then a lower low, and then you started putting on a trend whenever you did the first rejection of the 5 minute 20, second rejection, third rejection, and then boom, back down. Now the strength of the trend will be measured. I'll consider a 5 minute rejection like this a strong trend to the downside, right? Because it's such a small time frame. But whenever it gets super strong, you notice that it doesn't even catch up to it. It doesn't even catch up to it. You have to go to even smaller time frames to even see. Something like you'll notice that the 1 minute, right? Uh, and I'm sorry, I don't use 1 minute charts, but you'll notice, right? When we start trending lower very, very aggressively, this only goes up to the 1 minute 20 MA and rejects 1 minute 20 MA rejects. And you'll notice right here that this was the 2 minute 20 MA. I mean, I'll compare you with this 1216 on the time right here on the bottom, 1216. You'll notice, let's go to the 2 minute. And like I said, I don't use this for trading, but it's just to tell you how strong the trend is, right? Let's go to 12:16 right here on the time. Uh, Actually, did we go a little higher? Yeah, so it was around the 3 minute. Sorry, so it was not the 2 minute. Let's go up to a little bit like the 3 minute. Let's see. What are we? What are we? All right. So around this. So you see right here, yeah, 12, 20 something, right? So you see like it switched from the trend not being that strong because it was at the 1 minute 20 EMA was rejecting right here. That broke, but it was met with like the 3 minute 20 EMA and then drop, right? So I was left trying to find an entry on this drop because I was waiting for the 5 minute. That's one of my rules. But you can tell that the trend is very strong whenever the smaller time frames are catching the rejections, at the 20 MA, but it's in less time frames, right? Instead of 5 minutes, 3 minutes, and so on. I mean, it held, one, two times, and back down. Um, Obviously, like to me, I don't like to look at that small time frames, and I'll stay at the 5 minutes because it becomes a very such a good entry, right? And to me, like I said, I did enter right here. I recognize that it did have a immediate rejection, but it didn't have follow through. So I can tell you right here, because of this candle, even though it rejected later like this, that the trend is not strong. There's no trend to seek. So you can lower, even if you do get green on this trade, you can from this, just from this price action that it was not as strong like this, you can lower your expectations of okay, it's not gonna go down that much. It's going in my direction, but I have to be one foot out and see how much I can get out. Trail your stop and whatnot, right? So and we see happening, right? Like, so the market's trying to place a higher low right here because of the lack of strength to the downside, and you're gonna see this a little push higher right here. So a little bit of a higher low, but this is still a lower high. So sellers are still in control, at least on the 5 minute time frame, right? We made a low, a high, a higher high, but a lower. I'm sorry, a higher low, but a lower high. So this is what we're talking about. Like, do we have characteristics of a trend? No, but we do have a characteristics of a range, and we can also just switch your trading strategies to trade ranges, right? See what's gonna break. See who's gonna take leadership and whatnot. So uh, right now, what we have on the market as of this moment, it's a little bit. People are probably very confused on why the DXY is down 1.71%. If you notice on all this, you know, we have the dollar down a lot. We have VBIX coming up still. There's a lot of interest on VIX calls. There's a lot of interest on longer expiration puts because the VIX is going up. There's a lot of interest on gold. There's just the if you look at TLT as well. Let's just switch to TLT right here. And this is look at bonds right here, guys. Look at bonds. 3.35% of bonds. This move is huge, guys. This move is huge. Look at the daily candles just so you can understand how big of this move is. Look at this. Look at this gap. Look at this daily candle size. This move is huge on bonds. I mean, this is all this are signaling that the market is flocking into safety. It's not selling hard, but it's flocking into safety. Um, I think, I don't know. It's a duck and cover right now. The market is a little bit of a duck and cover, you know. Um, I will probably stay away from longing, what's it called? Uh, very high growth stocks, or technology stuff like that, because it seems like the trade on right now, what the market is represented with this information right now for me, it seems like it's risking off as much as it can, risking off, risking off. Seems like a rush into risk off assets though, but that's what's happening, right? Um, so that's what we have going on, and yeah, I think I'm gonna stop the lesson for the day, and I'll keep streaming, but this I'm gonna stop the video right here. I think we there's more characteristics for a trend day and a range day, but those are gonna be your main ones, right? You can also there's some stuff that you can look at internals, which is and looking at internals, knowing what internals are is gonna be another lesson for another day. But some characteristics that you can find if you have a strong trend day or not, right? Like let's say for example, this video you're not gonna know what ADD is or ADSPD, but negative 2000s, it's a level for a strong trending down day, right? Or vice versa, positive 2000 trending up day, right? On ADSPD is negative 400 and a little deeper than negative 400. That's a that's a strong trend there, right? Because it means that most of the stuff is bearish, you know. It means that most of the market is in sync to the downside for bearishness. And right now, I cannot believe. I mean, how it's just people are going crazy buying puts on the SPX and when a longer expiration. This is to remind you, that people have been ignoring the VIX for so long because it's been very boring, very boring, very boring, very boring. But these moves that we have in the past couple of days is, I mean, it's crazy. This just means, a lot of the we've been coming down on the markets, trading sideways and whatnot, and a lot of the put buying that we've been having has been short-term expiration. So the market has not been expecting that kind of volatility in the future, and these moves that we have in a couple of days in the VIX tell us that the market is expecting a bigger volatility in the future. They're just people are rushing into buying longer expiration puts, which is that's real hedging. That's not day trading. That's real hedging activity for big portfolios and whatnot. Before I end the video about the trend days and all that, can I get a couple questions? Anything that you may want to know? Look at this. We have the rejection of the 15-minute 20 EMA. So we know that the trend is down. We just don't have it that strong, right? Because it has to be all the way up to the 15-minute mark. Any questions? And like I said, this will be recorded so you guys can review it again later. Yeah, I mean, we did touch just a couple of points, right? Touch a couple of points on the on just figuring out if you have a strong trend day. I mean, in reality, it's just you will have. I mean, as a trader, I'll take my chances. Like I went short right there at the 5-minute 20 MA, right? And as a trader, I'll take my chances, even though I don't know if it's a trend day. I just I'll just use I'm already in the trade and I'll use the information that's coming into me, like what we call market generating MGI, market generated information, so I can determine my expectations. I do get a rejection, but my expectations are like, okay, we're not gonna trend down, so I might just either get off the trade, get out of the way, or just lower my expectations. Take less profit, less profits along the way. So any questions so I can end the video, or and then we're gonna hop in on the morning trade. Why did I take it and all this stuff. No questions. All right. Oh, I'm ending the lesson of the day, guys, and I'll post this video a little early today. I know I posted the last one too late, but I did it right here.